Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri. We got another exciting blockchain, crypto, stock market analysis interview today. We're going to be talking with the one and only Nicholas Merten. His website is nicholasmerten.com. And if you've seen him on YouTube, you know he has a very popular YouTube channel called Data Dash. And he hosts it and discusses stocks and crypto. And the last time we talked was during a time when crypto wasn't as exciting, but that was the importance of that interview, was talking about it when arithmetically things were much more affordable, much more cheap, but we did discuss the possibility of much higher numbers than even where we're at today. So in my opinion, it's still very early. The enthusiasm is rising and price is symbolizing the future and solidifying that for all the naysayers out there. That's something that I personally feel was going to happen. It happened in 2017, and we're seeing a pretty exciting turnaround now. So without any further ado, Nicholas, thanks for coming on Crush the Street with me again.
Kenneth, thanks for having me on again. It's always a pleasure. And, to hit on a point you were mentioning there about, kind of getting a perspective as to where we are, even though, since we last talked, I think it was back in February, Bitcoin was sitting probably somewhere around 3,500, something around there, setting one of its final lows. It has gone up close to, it's well over doubled in the past few months, and almost went up to a triple since the lows of Bitcoin around 3,100. But even though I do believe we are going to see a correction, I mean, in this phase and everything, I think we are just getting at the beginning of really the next super cycle for Bitcoin. It's going to be a multi-year trend, but there's a lot of things going for it. So I'm excited to dive into those and talk about all kinds of related topics.
I saw this on Twitter. Many people compared Bitcoin to tulips, right? But tulips never went on to regain new all-time highs every couple of years. Bitcoin does that. So, what does that say about where we're at and what we're experiencing now with Bitcoin and its viability here in 2019?
The one thing that I think is hard to get to a lot of skeptics of cryptocurrencies is that they don't see this as an emerging asset class. So because something moves up very dramatic, they call it a Ponzi scheme, they call it a bubble, and they don't realize that, with any given new asset class, especially if you're starting off from zero, you're going to have either the best performing asset class, as we've seen with Bitcoin. Bitcoin has been outpacing the S&P 500, all the major indices, commodities such as gold and silver. I have a lot of gold and silver people I admire who are huge skeptics of cryptocurrencies. And the thing is, they don't see that this is basically the fifth evolution of money. So the long story short, though, in the sense of Bitcoin, and you were talking about it as a pure investment, we don't even have to talk about the fundamentals. As a pure speculative investment, there is only a short window of time in Bitcoin's history from where we are right now that you'd actually be down on your money on Bitcoin. That was basically, I think, the later stages of November or early December. And then basically to, a short period of time during the bear market in that case, where you'd actually be down on your money buying from the top of Bitcoin at 20,000. Outside of that, you're either neutral and up in your money. And I think this goes to building this point that we talked about in the last episode, which is that even though Bitcoin does have these very big parabolic run-ups, usually a 10, 20, sometimes I think one of the previous rallies a 40x, it has 80% corrections, because obviously when you have these parabolic run-ups in the early days, you're going to have sharp corrections. And what I think you'll see is, just like with gold as a store of value, even just in the last century, gold's volatility on a yearly basis, again, there's a few, variations and stuff when there's times of panic in the market, but it's been slowly declining down, and it's become much more of a neutral asset where we can guesstimate the value of it, as most of it has been mined, as it's been well known across the world as a hedge. And the same is going to be for Bitcoin. It's going to, every year, each rally is going to get a little less high, and the sell-offs are going to be more around 70, 60, 50% until we get down to a very rational range where it can act as a full-on store of value.
Nicholas, one of the big things that I know a lot of us are anticipating and we're seeing is the institutional money start to come in. And one of the biggest stories, at least in my opinion, that we've seen is the grayscale, the GBTC buying up 21% of Bitcoin's monthly supply to get ready for, the trading and everything it's doing, the infrastructure, the build out of the ETF, the exchange, and building out this vehicle surrounding crypto, Bitcoin. I mean, this is huge news. And this is really the demand coming from the Wall Street money, if you will. So Can you touch on that a little bit? And again, it further solidifies, what is happening with this new digital age of currency, money, and digital assets.
Yeah. Well, I'll put it in an analogy. If someone were to say that I want to buy Apple stock and I'll pay a 30% plus premium on it right now, you'd probably want to know what Apple's up to, right? Well, that's the exact case that what's happening with GBTC. So GBTC is, if I'm correct on, I think it's an exchange traded note. So I'm not sure if it's like a full blown ETF that everyone would be able to invest in. But if you are like an average retail participant, I know, for example, people, my family on their E-Trade accounts have traded on it. Most people can get access to GBTC, which is an actually physically backed Bitcoin ETF. And it tends to trade at a premium because it's quite limited in that sense. It actually has real Bitcoin backing it. So with the limited number of shares, as they're able to increase their number of shares as they increase the supply, this is definitely going to open up the opportunity for some to invest in GBTC. And this has kind of been around for a while. It's been, I think, around since 2015, 2016. And it gives you some exposure to Bitcoin, but it shows that there is that institutional interest. There are the futures contracts out there for those who do trade futures markets. We're seeing Fidelity as well coming out with the Bitcoin trading services. It's going to start off, to be fair, with institutional clients and start to trickle down. I wish it was open to just anyone, honestly, but I think E-Trade wants to, Fidelity wants to experiment with it, see how it works. And then over time, you're just going to see it's a trickle effect in this case. Like if one company does it, another one has to come in. And I remember of just countless stories during the bull run last time around in 2017, where people would be calling up the broker and they're saying, I don't know how you're going to do it. I want 5 or 10% of my retirement fund or my investment portfolio to be in crypto, right? And it's something that should be available to clients. So I think it's coming this time around. I think companies aren't going to miss out on it. They realize that Bitcoin moves in very parabolic cycles. If we're starting at a base of around 3,000, unlike where we started last time, which was a few $100s from the crash of the last cycle back in 2013. Where do you think we're going this time? It's going to be beyond 20,000. And I don't like to shoot big estimates. I know I had talked, I think, on the previous episode, the longer term picture I see is somewhere, and I'm actually more conservative than most, is something around 50 to 60,000. Some people see hundreds of thousands of dollars, things like that. I don't know if we're going to get there overnight. And I think the cycles are going to be much more conservative and eventually lead to those hundreds of thousands we hope to see Bitcoin at in the future. The only way I'd see that is if there was a currency crisis of some sort with the dollar.
Right. Well, and it's interesting to see the dynamic of the crypto markets. We've seen bear markets play out in, for instance, gold. And gold has been a pretty long depressed bear market. And many point to manipulation, the control of gold, although gold is doing seemingly pretty good over the last couple of days, materially over $1,300. But it was kind of interesting to watch Bitcoin turn around in a very short period of time. And, there's skeptics out there that are calling this a dead cat bounce. It's not fundamental. It's still in the down cycle, if you will, right? Right. We were at 20,000, we went down to whatever the $3,000 range. We bounced back and then it's still trending down. So maybe touch on both of those aspects, either the shortness of the bear market and how quickly it's turning around, or the idea that we're in this long-term bear market heading lower.
Yeah. Well, to answer your question, and I think an interesting way, to try to understand what's caused this, I think a lot of people have been like kind of flabbergasted. They just look at the price and they're like, why is it going up? No one predicted this. If even myself, to be completely fair, I mean, when people were looking historically at the charts, they thought, we might be able to get up to 6,000. Then we were traced down to 4,000 or something like that. But Bitcoin has been having this really parabolic run up towards the second quarter of 2019. And as you were mentioning, gold earlier, for example, has been in a depressed bear market ever since its peak in 2011. So why has gold, this hedging asset, even at the time, for example, with the trade war and, fears of the Fed pulling back monetary policy, meaning money needs to exit out of equities eventually, why is it that gold's just finally starting to perform after all this craziness over the last few years? Well, gold has about a 1% to 2% inflation rate every year. There's new gold being mined every year. And that's standard with most commodities. But it means that if it's an inflation rate that's very similar to what we're measuring in the sense of the dollar, it doesn't trade too well compared to the US dollar. In some cases, if the US dollar holds, you're better off in the dollar. Whereas in Bitcoin, even though we're at a very similar inflation rate, I think actually we're slightly higher than gold right now. Bitcoin is about to go through in 2020 what's known as the block halving. And this is where miners who are securing the network and being rewarded for the computational power they're putting in, their reward is going to be cut in half. So instead of receiving 5 Bitcoins, I think it drops down to 2.5 Bitcoins minted every 10 minutes. So the supply starts to really shrink down. And if miners are putting up the same cost, if not more over time, to mine half the amount of Bitcoin, you inevitably have to price that into the market. And the reason that is that so long as people are mining it, it's the same as commodity producers. If I'm drilling for, for oil, for example, and it's costing me $20 to create a barrel in that case, I'd be much better off just basically buying it up on the market. For example, if the, in the case of Bitcoin, for example, going out and just basically buying it on the open market in that case, instead of actually going through the process of mining. If it's too expensive for me to mine it and I'm losing money, it's not worth it at that point to produce it in that case. And then what you do is you have production cuts in Bitcoin. You have less people mining, difficulty goes down. It's very similar to commodity markets in that way.
So, Nicholas, let's talk about the stock market. That's something you've been covering now. I'd be interested to hear your thoughts on where we are with this decade-long bull market that we have seen in stocks. And, we're seeing some volatility at the moment with the trade wars. Trump's talking about Mexico now. The China deal kind of got disrupted. And there's volatility right now in stocks. And of course, it's pretty high. So just looking at it from, without any of those details, you would probably expect a pullback here of some sort. Yeah. Having said that, I'm just curious, what are your thoughts here on stocks? Does it benefit Bitcoin if we start to see volatility in the stock market, this inverse correlation, maybe a flight to safety like we might see in gold if gold reacts the way it's supposed to react here as a hedge against, diversity, uncertainty, and whatnot?
I think you put it perfect there, Kenneth, the flight to safety. And isn't it ironic at the same time, right as equities are starting to see these very big swings? If you look at the NASDAQ, the Dow Jones, and the S&P 500, the FANG stocks are printing lower highs, meaning that investors aren't buying up at the same price range they were before. They're getting fearful. And also the small caps have been really underperforming as well. So those two signs to me are like very worrying. And I think as well, it's interesting that, with all this growing fear, we now have Fidelity. We now have all these companies starting to prop up and offer, GBTC, as you mentioned, stacking up the amount of Bitcoin they own for more shares of the GBTC ETF. And I think that is this interesting correlation. Now, for stocks, I traded originally in stocks over the last 6 to 7 years. And the major points that I would drive home is that I was actually quite long in equity markets. Even though I knew the fundamentals were flawed, I knew that there was QE in place. I knew there was lowering of interest rates, practically net zero interest rates for a lot of countries. And because of that, it's free money. And you'd be stupid to bet against that. Not to be rude to anyone in that case, but for my trading strategy, I was like, I got to play along with the game. But in 2018, when you finally, if you watch, there's a lot of great statistics online that show the entire central bank balance sheet of all the major central banks, from the Federal Reserve to the European Central Bank, the Bank of England, Bank of Japan, People's Bank of China. And you start to see that they're now entering into quantitative tightening. So they're squeezing global liquidity, and they're now raising interest rates to compete for a stronger currency. Then lo and behold, you've got a hot mess for equities. And the game and the rules of the game have changed. So now it's time to start taking on hedging positions. It's time to start getting a little bit fearful on risk-taking equities. And some people would say, then why would you go long Bitcoin? Well, because people are finally starting to understand in the financial sector now that it's starting to get ingrained through a lot of the higher ups what Bitcoin really is. Bitcoin itself is a non-correlated currency. It's not tied to any country like the US dollar would be to US markets, how US equities would be tied to US markets and the performance of gross domestic product in some way. Bitcoin is completely separate from any nationality, any government, any company, or any entity. It simply acts on its own. And with a limited supply, and actually a finite supply, unlike gold, a finite supply at 21 million coins, you know exactly how many Bitcoins there will be created. And having that all together, the solid monetary policy, the ease and use of sending money of any value across the world and doing it without permission and not being tied to anything makes it the ultimate hedging value. It's not very clear and apparent right now because it's not in the hands of billions of people, but in any new market, you have to look 5, 10, 15, 20 years ahead. I mean, this is going to be a massive multi-trillion-dollar market. I genuinely believe that. I'm mostly exposed into cryptocurrencies because of that, and I can't wait to see where it grows to. I don't know if it'll dominate all currency markets, or I don't even want to make the claim that it'll be big as gold yet, but I know it's going to be a multi-trillion-dollar market. And right now we're sitting at Bitcoin being valued around 150, 160 billion. I think we got a ways to go.
Yeah, I like Peter. I like watching Peter Schiff debate the crypto guys. It's interesting. I hear both arguments, and sometimes you can't just invest altruistically. And I know Peter, he makes these altruistic arguments as to why Bitcoin isn't gold, or why Bitcoin isn't as good, or all these things. But that doesn't mean that it's not going to be adopted and used, and therefore go up in price, because it doesn't matter if you have this altruistic. You can make this argument that of whatever you're going to say about it. If people are going to adopt it, there's a network effect. More people use it, therefore it's going to go up in value.
Yeah,
End of
so
story. That's it.
we had Peter Schiff on the channel. I love Peter. I mean, I've admired him for years. He was one of the first few guys who got me into like the interest that I have nowadays. But there's one thing I would say to Peter. I've noticed this after the time I talked to him and the other interviews and debates I've seen him in. And it's just one thing that I see with a lot of like precious metal individuals. Like I've been interested in gold and silver for a long time. I love the fundamentals behind the commodities, and I know the history of money. But the thing is, I see them still getting kind of entrenched in that tangible kind of mindset. It's like gold is used in this industrial use case. It's used in cellular devices. And because of all these use cases, that's what makes it valuable. And at the same time, I think people haven't stood back and actually looked at the data. The vast majority of gold is used in one of two ways. It's used in jewelry, which is not really commercial application at the end of the day. It's not industrial in any way. It's just sitting there. And then the other use case is that it's in vaults where no one's touching it. No one's seeing it. The only thing who's seeing it is the security cameras and the security systems that are watching over it. Now, that doesn't seem very useful. Well, it actually really is. It is because gold itself is limited. It has fungibility properties. It is something that can last a very long time without deteriorating. It has the perfect chemical composition to be used as a very powerful utility, and that is to store value. But it's not very good for transmitting value. I can't send my gold from here to Japan in a matter of a few minutes like I can with Bitcoin. I can't take my gold, for example, and use it at a retail store. They can do that with cryptocurrencies if stores simply have a mobile wallet downloaded on a tablet or some kind of device, or have Square or other payment applications. So what you're seeing here is, and not to mention another thing that I talked about as well, gold has inflation of about 1% to 2% every year, and it's been consistent like that for a century. What's to say that it's not going to keep being like that, as we tend to find the theories of peak oil and these kind of peak cycles for commodities? We tend to find, oh wait, there's better ways to drill, and we find more stuff down below. Gold in this case is not as superior as to Bitcoin in the sense of its monetary policy. It is finite at that number. You want to have one Bitcoin, you probably want to get it now, because there's not enough millionaires in the world to even own a single Bitcoin, right? That's a good analogy to kind of put it in perspective. So I know I rambled on about that, but Peter, he's a great guy. I would love to just sit down over dinner and talk to him about it. But I think at the same time, just like how I'm involved in crypto, he's involved in gold and silver, and I think he's got that incentive in mind and stuff to protect it as a commodity class. And I think they take Bitcoin on their website, so you can buy gold with Bitcoin. So Peter at least likes it that much.
Well, yeah. Well, he'll make the argument that he'll take Bitcoin. They're going to convert it instantly to dollars. So he's essentially
that's fair. Yeah, I guess
dollars, right? I think what's important is to understand what people say and hear what they're saying, but then be able to make an educated opinion on what to do going forward. Because making any altruistic argument with this extreme amount of certainty and betting the farm on something is difficult, because it's like the old saying says, markets can be irrational longer than you can stay solvent, right? Mm-hmm. So it's, and I'm not saying that investing one way or another is being irrational. It's just you don't know exactly how things are going to play out, and you got to be smart and diversified enough and exposed to different things to give yourself the best chance of winning going forward. So new topic here. a derivative of what we've been talking about.
Mm-hmm.
Bitcoin was the safe haven during the crash. And I think a lot of people were reminded of the dominance of Bitcoin during the bear market. And, many people were talking about the flippening and, is Ethereum going to take it over? Is Bitcoin Cash going to be the new Bitcoin? All of these different things. And, it's still very early in the game, but Bitcoin really reminded people of its status, especially through the bear market. And now many of the currencies are coming back. And just like we can expect, the altcoins are in some cases outpacing Bitcoin. They're recovering faster. There's a higher return on some of these. And I'm sure people are going to start saying, oh, look at what's going on in Ethereum. Look at what's going on in Bitcoin Cash and some of these other ones, as they're a smaller market and it's easier for them to move higher. Plus there's the number bias. You see this $9,000 nominal number for Bitcoin. Go, well, that just seems,
I can't own a whole Bitcoin.
right. So that just seems expensive. So I want to own something else that's cheaper. And I'm sure that'll scare off capital from Bitcoin just because of that concept, right? So just, I ask these very loaded questions. I hope you don't mind. Just talking about, Bitcoin during the bear market, how it dealt with that, it's people's perspective, how it got through it, the solidification. But then now going into the bull market, are people going to start, trashing it and looking elsewhere and, getting frustrated with Bitcoin and jumping ship?
Yeah, it's funny. I love the ending part you talked about. Man, I really enjoyed, Kenneth, watching the shift that I saw in the crypto space, where during the bull market, man, I got a lot of people sponsoring and standing by a lot of altcoins. And then lo and behold, when the bear market comes through, everyone says Bitcoin's king, right? So I don't know if it was people either learning that inevitably they would like Bitcoin, but I have no doubt you will see heads turning the opposite direction, back to being more risk-taking and more risk averse, or I guess not risk averse, more onto taking risk in that case, as Bitcoin starts to enter into the longer term trends. So we are, as you mentioned, in very early stages. This is equivalent to when Bitcoin went from 300 to around 600 and weighed around the $400 to $500 area back in 2015. So we are very, very early on in this next cycle. And what I want to look for is that similar pattern. I want to see basically Bitcoin go up, hold around this $9,010 range, correct down, have about a 40% correction back down to 6,000, which was previous support in the last cycle. And then from there, if we can hold that, we can start to see Bitcoin not only move higher, but I think we'll see excessive risk taking in altcoins. And the other thing I always point out as well is that altcoin risk taking actually increases with the later parts of the cycle. Because people are seeing profits with Bitcoin. And obviously there's a lot of periods during the bull run where you don't want to bet against Bitcoin. A lot of people lost throughout the summer of 2017 trying to hold altcoins when they just would have been better off with Bitcoin. And then, and literally the last month before the end of the cycle in January and also a little bit in December, altcoins just popped like crazy. Even if you take a look at the logarithmic chart, it was where some of the best performance was, because there were days where it was just 20, 30, 40% increases for some of the major altcoins. Now, in the sense of psychology, I don't think the buy, because we're in this next wave, we're really going to be dealing with institutional investors. I think marketing to retail investors, that's like, no worry, you can just buy a fraction of Bitcoin. It's not a problem. And institutions, I think, get it now. Not to mention they could buy a whole Bitcoin. They're probably looking to buy tens, hundreds in that case, if they're really buying up a large stake for other institutional clients or themselves, or for investment portfolios for retail participants. So I don't think it'll be too much of a psychological barrier. It didn't prove it in the past when Bitcoin went to 20K, and I don't think it'll be the case as well for this time. But like you said at the beginning, and as I was pointing to, I think you'll have a lot of shifting heads towards supporting altcoins and talking crap about Bitcoin. But we'll have to see.
So Bitcoin has had some time to build out and prepare and scale, and the talent, the developers are all working on getting the Lightning Network built out and whatnot. But I'm curious, the question, of course, Roger Ver has for Bitcoin is that it's not cash. It's not what it was originally tended to be: efficient, fast, cheap, all these different things. What are your thoughts on Bitcoin as it stands and as it's evolved? And, it's kind of become this storage vehicle. A lot of people are saying, well, it's not cash so much anymore, but it's more of like a storage vehicle. What is your sentiment as it pertains to this aspect? And do you believe it's problematic for Bitcoin long term and leaves an opening for other cryptos to step in and fill these voids?
Yeah. So I have a very interesting view. I've had people like Roger on. I've had people as well who are very tied to Blockstream and like, kind of the core, Bitcoin at the moment, like the original kind of Bitcoin protocol that we've had before the fork. I've talked to people from both sides, and I will say on a moral side, I feel the portion of Roger who is obviously driven on his libertarian views and like the idea of seeing cryptocurrencies being used as the store of value. In that case, it's similar to gold, as gold bugs and everything, they prop up gold, but they'll never use it in merchant transactions, obviously, because right now with Bitcoin as well, it's not very convenient. There's pretty high fees for it. Like the fees, last time I checked on my mobile wallet was like $1 or $2. It's back to having some relatively high fees for payments, and that's making me the consumer pay for that. That's silly. So I would say that, yes, that makes me upset in that case. They are doing some awesome stuff with Lightning Network. It's gone from just being a back-end system to now that there's actually front-end applications that make it easier to use. But the requirement of making people set up Lightning nodes and like expecting merchants to set that up, I don't really think that's the best way. We need to really make the barrier to entry as small as possible. Now, one thing I want to build on with this point, it's jumping the gun a little bit. I think it's something though that will uplift a lot of us towards a clear vision rather than debating back and forth about is Bitcoin cash or store value. It needs to be both of those. It needs to be able to be transmitted in value in some way, shape, or form, and it also needs to store value really well. Its monetary policy does it for it. So what I actually see is something we've seen with Ethereum. And I think Bitcoin's going to be going down the same route as soon as well. And it's a part of the decentralized finance or DeFi movement, where we've seen a lot of interesting projects come out of. There's this one project in particular, though, called DAI, DAI, that's created by MakerDAO. And it's a stable coin, but it's a completely decentralized stable coin, unlike USD Tether, which is one where there's supposedly $1 backed behind each coin that's generated, and there's True USD, which is actually audited. Unlike those coins, this cryptocurrency is crypto collateralized. It has a CDP, a collateralized debt position, where basically people lock up their Ethereum in the DAI smart contract, and they basically get a certain amount of DAI in return. And those DAI have certain mechanisms that keep its value at the dollar or relatively close to it. So what I see happening over the next few years until crypto is, lack of valuation, and this is going to be over a minimum. During this process, people are going to be locking up Bitcoin and Ethereum, these kind of major cryptocurrencies that have been renowned and are relatively well distributed, will be able to go into smart contracts and be able to be acting as a collateralization, or what I like to say is basically the store of value behind these stable coins. And what's cool about this, and a lot of people are like, oh, great, now we're going back to the dollar. But what you actually get is you're giving away to have a censorship-resistant dollar to anyone in the world. And this basically means that, let's say, for example, Kenneth, you had a business that I really liked or something, and you needed some money, and you're willing to pay me. I'm willing to give you out $10,000, and you're going to pay me 7% interest back. I can send you 10,000 Bitcoin USD. Let's say we created a new coin similar to DAI on the Bitcoin network. I could store my Bitcoin in that contract, get $5,000 or $10,000 worth of Bitcoin USD, and I can send it to you. And no government, no central party, or no need for a third party, they can never censor that transaction. It's truly peer-to-peer. It's the world standard for currency. And until we have a dollar collapse, and until Bitcoin becomes that new currency, new store of value, we can use the world reserve standard, anyone in the world, even people outside the United States. And, especially if Bitcoin and Ethereum implement privacy standards like ZK snarks or zero knowledge proofs, or maybe Mimblewimble, which is another privacy technology, it can be completely private. And that's the amazing thing. We're like on the verge of these really cool technologies that can come in and really make Bitcoin not only a store of value, but peer-to-peer cash as well, which I'm excited about.
So, Nicholas, again, I think the price is just really causing a lot of people to be enthusiastic about it. The momentum that's building momentum. When do you think is it possible that we go beyond $20,000 Bitcoin? And what does that symbolize? Is it really kicking into another higher gear once we get into a new all-time high for Bitcoin? Because right now we're still down materially. And you made a good point that, there's been a very short period of time where we've even been higher than we are now. which is very significant. But one thing I would mention is that unfortunately, there was a lot of volume that took place at these levels where,
Right.
large chunk of people were getting in at $15,000, Bitcoin, right? So to that effect, there's a lot of people that are still potentially materially down unless they've been buying all the way through and dollar cost averaging, which most people don't. Most people lose money in markets, right? So what are your thoughts on that?
Yeah. So to build on your original point, looking forward, basically, if we were to get back to $28,000 for Bitcoin, this would be very similar to when Bitcoin retested $1,000 in the last cycle. So a big differential in the sense of price range, what we're talking about. But even when we reached 1,000 back in 2000, like the early parts, it was the end of 2016, early 2017, the cycle had just begun because we still had a 20x after that. That was when we actually set out new gains for Bitcoin, a 20x from that high range. So what are we going to do this time around? Some people say we're going to do another 20x. So you can do the math on that. 20,000 times 20. Obviously, in that case, it's going to be somewhere around 400,000. I don't think we're going to get that kind of exponential this time around unless there's some kind of collapse, or maybe we really do get another .com bubble for crypto in this case. But I really think it's going to be something much more realistic, about 5 or 10x after that. If anything, that's like the kind of maximum. I still have my target range like 50, 60,000 at least. And when you're talking about as well, what's it going to look like for retail participants? I mean, I've tried to stress to people, and it's kind of sad. It's like an inevitable thing in nature. I remember when I was talking to my family at Bitcoin being around 2,000 or 3,000, like, guys, you need to get Bitcoin. You need to get Bitcoin. But studies have shown, and it's become evidently clear by now, that people like to buy it when it's high. When Bitcoin was between 16 to 20,000, the amount of friends, family, I rambled to like for hours trying to get them to just get a little bit of a Bitcoin or get one Bitcoin if they had the money for it. They finally wanted to buy it, and they wanted to buy a fraction of it. I'm like, you guys, you're going to get wrecked. And a lot of people still did. And they, you can't transmit it. It's just history repeating itself. So those who do their research will benefit very, very well in this next cycle. As with any cycle in financial markets, you have to put in the time and dedication to it. Until this market stabilizes, if you want to step into the wild, wild west, you got to come prepared. That's the way I kind of put it.
Yeah. Well, and even a guy like Peter Schiff, he's cynical, but he had people raise their hands at the SALT conference they had people raise their hand on who owned Bitcoin. And he's like, well, most of them probably just put some gambling money into it. They invested in it the way they would put money in a slot machine. They didn't actually put material amounts of dollars in it. And I think to be fair, that's probably true. There's a lot of people who dip their toes into it. And to a certain degree, I did that, but I did it very early on with, a certain amount of money I was able to lose. I could afford to lose, but it was material enough to make a big difference when it grew, if that makes sense, right? And it was very material, actually, but I was fortunate to be in it early on. And it's hard to tell somebody to say, hey, you need to go put 10% of your money into Bitcoin, $9,000, because the fact is it could go to $5,000. I mean, it's not something that just is like gold that stays, within 5 to 10% and, will not likely crash ever below $1,000. Bitcoin, and I'm not talking about Bitcoin going to 1,000, but gold going under 1,000. There's a certain amount of safety that you have in long-term thousands and thousands of years with it, right? So anyways, rambling Kenny here. I want to pass it back to you. What is your thoughts on that?
Hey man, I ramble just as bad as well. So I guess we got that in common. but no, to build on your point, Kate, that's true. Like the one thing I always say to people, with Bitcoin, there's a very streamlined way to investing in Bitcoin. I did a video called, it literally was just taught how to simplify Bitcoin investing. People like myself who covered on a daily basis sometimes can make the mistake of overcomplicating things for viewers. In that case, so I try to produce kind of more long-term thinking, simplified content for the average everyday person. And in this video, I basically say that there's really 3 phases to Bitcoin. You obviously have the uptrend, you have the downtrend, or the bear market, and the bull market for when it's going up. And then you have a consolidation period where prices push sideways. We just are slowly but surely moving out of the consolidation phase. And what you do during a bull market is every time Bitcoin pulls back anywhere between 30 to 40%, really depends on when you want to enter. It's within that range. Like 9 times out of 10, the corrections for Bitcoin that it's going to have are going to be in that range, 30 to 40%. That's when I average down. I add my positions. And for the positions I hold, I mean, you can try to trade and try to pick up the little tiny tops that are the multiple different tops that will be in the cycle. But it's best just to, add in on every 34% correction, 30 to 40% correction. And then once you get to like a major multiple in Bitcoin, when it is literally going exponential, everyone and their grandma is talking about it. CNBC is telling you how to buy cryptocurrency. That's when you finally, if you want to, you can move out of your positions, because the only reason I'd say that you should consider that is that even though you might not time the top, you might sell a little bit early, you want to be able to lock in most of those gains, because Bitcoin is going to most likely have another 80%, 70% correction. It would be terrible from all those times you averaged down and all the gains that you made to not sell it and then lose it all just like that. Especially if you average down a lot along the way, you might end up negative. And I think that's what a lot of people did. They get too attached to it. But understand, this is the Wild West. And if you really do love Bitcoin as a protocol, if you see value in it, you should be comfortable selling it in some cases, because if you know you can get more at the end, if you know historically this is how it acts, then you can use that as a guide. Now, it's not final, and I'm not trying to give anyone any direct financial advice, but that's kind of how I approach it. And if you guys want to check it out, it's on the channel, but it simplifies it so easily. Every few weeks, you check back, oh, is Bitcoin corrected 30, 40%? I average down. Okay, it's going back up. You can try to trade in between, but I just say average down and then sell towards when things are just getting way too exuberant in the market.
Nicholas Merten, everyone. Nicholas, thanks so much for your insights and coming on Crush the Street with us once again. Very timely. Again, I appreciated our last interview to discuss it early. I think a lot of people benefited from the timeliness of that interview. And it was great to do an update here in June of 2019. I mean, we're watching the Wild West of crypto, and I like the way you said that. So if people want to learn more about you, your website, your YouTube channel, please let them know where they can go and, of course, what they can expect to find.
Yeah, well, Kenneth, it was an absolute pleasure. Thank you for having me back on. If you guys want to check me out, just simply look up Data Dash on YouTube. You'll be able to find my channel up there. If you want, consider subscribing and always ring the bell icon, because YouTube doesn't always notify subscriptions. But I have a lot of great trading material on there, things of that sort. If you want to check out my newsletter and some of the material that I put out and just some of my background, you can go to nicholasmerten.com. But those are really the two major places. And if you want to follow me, I tweet sometimes at I think it's at Nicholas_Merten or Nicholas Merten on Twitter. So should be able to find me on there. I think it's like 40,000 followers or something like that. So they'll be able to spot it.
Yeah, no big deal. Just 40,000, right?
Well, the thing is, I honestly, I was hoping I had more. I was late to the ball game on opening up a Twitter account, because it was so crazy during the last bull run stuff. But yeah, there's a lot more people who have more followers in the crypto space. But yeah, I think that'll be a good little gauge to see there's a lot of fake profiles out there with all the crypto individuals.
All right, Nicholas. Thanks so much for coming on the show. Appreciate your time.
Kenneth, as always, it's a pleasure. Thank you.